What's up, guys? Welcome to Stock Talk with Nico Kritikos. Today, we're going to be doing some stock analysis into Nvidia stock, and we are going to do some in-depth fundamental analysis. So, first thing we're going to look at is the stock chart here, and we can see that Nvidia had a big run over the last couple of years. For in between this 2018 to 2020 period, Nvidia was really around this, $40 to $60 a share price range, and then after the pandemic, the stock went all the way up to $333 a share, and now we are down over 40%, I believe, from its highs, and we're down to $165 a share. And so that's going to bring us to our first checkpoint on Nico's stock market checklist, and that is the stock down? So, and also, if you don't know, Nvidia is one of the largest companies in the world. They specialize in artificial intelligence, in VR, in robotics, semiconductor chips, GPUs, and various hardware and software products. So first thing on my checklist is it's going to get a yes, because the stock is, I believe it's down enough and it's oversold. Then we have how is revenue and income. And if we take a look at Nvidia's revenue and net income over the last couple of years, we can see that they've done a great job growing it. And especially in 2021, they did an amazing job growing it. And part of it is because there's a chip shortage out there over the past couple of years, and that's brought a lot of demand and a rise in prices to their products. So we can see in 2021 they did $26.9 billion of revenue and $9.7 billion of net income, which is huge. This is why they're one of the largest companies in the world. And those numbers were, the revenue increased 61% compared to the previous year, and earnings increased over 125%. So really nice numbers there. Both of those are going to get a check. Then we get to how is the forward price to sales, and I put no, because a 16 price to sales is very high, not only relative to the industry, but for how much they're growing. Yes, they're growing nicely. So if we go ahead and look at their projected growth, how we just saw, they did grow revenue, over 60%, and they're expected to grow revenue 25% over the next year. So they're still a great growing company. The problem is just a 16 price to sales is very high. And if you look at other stocks in the industry, like an AMD or something, you'll find that it doesn't trade that rich. So like this is AMD. If we look at their price to sales, we can see that it trades at a 7. Okay, so it's less than half. So that one's going to get a no, unfortunately. So then we get to price to earnings. I put yes. It's a 30. A 30 is not that bad, and they have huge growth. It was up over 125%. So that's it definitely looks good, because they grew net income so much. That's why that number is not too bad. Is this company innovative? Do they have a moat? Absolutely. I think this company has so much innovation at the company as far as what they do with their GPUs, what they do with computers, and now they're doing artificial intelligence and VR and all this stuff. They're at the forefront of so many things. They're one of the most important chip players out there and GPU players out there. They're also, playing a part in the metaverse that's going to be in the future. So that's another thing. So I think this company is definitely innovative, and it has a moat. Is the industry growing? Yes. All the things I just listed are all growing industries. Definitely the metaverse is a big one. As we know, the chip shortage is still going on, so there's tons of demand there. Then we get to return on invested capital. Nvidia has a return on invested capital of 25%, and that is according to this website right here. We can find return on invested capital 25%. And if we compare that with a company like AMD, I like comparing Nvidia to AMD. I think they are a good comparison. So their ROIC is 61%. Now that could just be a one-year thing. That doesn't mean they do that every year. They probably don't. But AMD is also a super respectable, strong company. Now, how are their margins? I gave this a yes, because if we look at this chart right here, you can see over the last 10 years, Nvidia has done a great job at growing their gross margin all the way to their net margin, and it's come from a money losing company 10 years ago to now 36% bottom line profit margin, which is fantastic. And if also we can compare that to competitors, once again, if we look at AMD here, we can see profit margins of 18%, so a little bit less than Nvidia. But once again, AMD is still a phenomenal company, great numbers and great margins. Healthy cash flow, I put a yes on this, because if we look at their cash flow statement here, we will find that they have been investing very heavily into the business the last couple of years. If we look at, I believe 2021, they invested almost all the money they had. They invested over $19 billion. And so you can see 3.8 of that was financed, 5.8 of operating cash flow, and then they had almost 11 billion sitting in cash from the prior year. So they're definitely investing heavily back into the business. But you can see operating cash flow continues to grow, free cash flow continues to grow, and are they investing a lot? Yes. So maybe they're getting close to being too leveraged, but they're still doing a great job with that. So I mean, you got to think too with what they're dealing with. I think it's a good thing that they're investing into things like the metaverse and stuff, because that's going to most likely be a huge payoff in the future. Then we get to diverse revenue streams. That's pretty much everything I listed before, all the chips that they make. They're in all these different industries. So I definitely would consider that multiple streams of revenue. With the tens of billions of dollars that they do in revenue, they have so many customers and tons of ways of making money. So I think they're definitely in a good position. Do they have positive equity on the balance sheet? Yes. And is it growing? Yes. If we want to look closer at this, we can see here that equity has gone from 9.3 billion 3 years ago to over 26 billion now. Do they have a healthy price to book relative to equity growth? At first look, I said no, but then I compared it to other companies like a Tesla and a Palantir, and it's right in line with where other growth companies are trading at. So Nvidia trades at a price to book of 15 or so right now. That is traditionally high, right? Most companies will trade at a price to book of like, whatever, 3, maybe a 6, maybe a 9 if it's a fast growing company, but a 15 is high. Tesla trades at a 21. That is also an extremely high number. And Palantir trades at a 7. So Palantir is trading at about half of what Nvidia is trading at. And Palantir is growing their equity 28% over the past year. Nvidia grew their equity 58% over the past year. So it's about in line with where things trade. Even though it does seem like a rich valuation, Nvidia is adding so much equity to their balance sheet, it kind of is justified. So then, is the equity over 10% of the market cap? And no, this is where the large valuation comes in. So they have 26 billion in equity, and the company is trading now for over $400 billion. So not exactly, it doesn't make it look cheap from that perspective. So that's going to get a no. Then do we have a healthy change in shares or a dividend? We don't have a dividend. We used to, but I think it got so small that it's just not there anymore. So, but a healthy change in shares, if we look over the past year, the number of shares for the stock has gone up under 1%, which is fine. That's not a big deal. So that's healthy. Are insiders interested? Yes. Not as much as I would like them to be, because there's still selling going on. Why are they selling at $165 a share? But they also are buying. So at least there's some buying pressure there. Is it founder-led? Yes, it is founder-led. And I absolutely think that this company has a good management team and a talented team of engineers and researchers and everything that goes into all those different types of technologies. Then finally, do they have enough cash to cover at least a year of expenses? And yes, they have about 20 billion in cash. And over the past year, they had about $18 billion of operating costs and of what's it called? Pretty much to get to their operating profit, they had to spend $18 billion, right? So it's going to get a yes. So all in all, this company has a 16 out of 18 score. I would definitely consider the stock a buy. Again, this is a great one to compare with AMD. I think both of those are super strong companies. So I really think that both of these are great stocks to own in your portfolio. I used to own Nvidia, but I ended up selling it. And now I would be buying into this company. There's so many other stocks out there that I'm putting money into that I never really got a chance to make another position in this one. And this one, it's still if you look at a 5-year basis, it's still up huge. So this stock could come down to $130 or maybe even below that. So it's something to keep an eye out for, but it's definitely a fantastic company, great numbers. They're still growing and a phenomenal positioning in the markets that they're in. And I think they're in the products and the services they are involved in. They are I think they're going to play a huge future, or they're going to play a big part in the future, right? So yeah, that is Nvidia for you. And if you have any questions, comment down below, and I will see you guys in the next video.